Hey everyone, welcome back to Macro Matters. In today's video, we're breaking down an important question. What happens to gold prices after BRICS decides not to create a gold-backed currency or payment system? The BRICS alliance has sparked global interest around de-dollarization, and many speculated they might create a gold-backed currency or payment system. But with no such system announced, what does that mean for gold prices and how might it impact global markets? Let's dig in. First, let's set the scene. BRICS, the economic alliance of Brazil, Russia, India, China and South Africa, has been a major player in pushing for alternatives to the US dollar in international trade. Many analysts thought BRICS would introduce a gold-backed currency or a payment system using gold as a stabilizer, but so far they haven't made a move. That's led to a lot of questions about how this decision, or lack of decision, affects the gold market. Let's start with the short-term effects. After the latest BRICS summit, where the much-anticipated gold-backed currency wasn't introduced, we saw a dip in gold prices. In fact, following the announcement, gold prices dropped by about 1 to 2% globally. Why? Investors who were hoping for a major new gold-backed currency or payment system were disappointed, which led to a quick sell-off. This dip wasn't massive, but it did reflect how speculative hype around BRICS has been influencing the gold market. Without the introduction of a gold-backed currency, the demand for gold didn't increase as some investors had expected. Now, why was there so much talk about a BRICS gold-backed currency in the first place? Well, gold has traditionally been a hedge against inflation and currency volatility. In times of economic uncertainty, gold often rises in value because it's a stable physical asset. For countries in BRICS that want to lessen their dependency on the US dollar, gold could have provided that stability. Many analysts thought a BRICS currency backed by gold would drive up demand and prices. But without that system, the US dollar continues to dominate, especially in international transactions. And without a major new source of demand, gold remains largely stable in relation to the dollar, which affects how much it fluctuates. So, while we saw that short-term dip, the long-term outlook for gold demand remains fairly strong. Why? Well, inflation rates are still high worldwide, and central banks, especially in BRICS countries, are buying more gold as part of their reserves. In fact, according to recent data, central banks globally increased their gold purchases by nearly 15% year over year in 2023. Despite BRICS not introducing a gold-backed currency, countries like China and Russia continue to increase their gold reserves. They're still hedging against dollar volatility, but instead of relying on a BRICS currency, they're choosing to directly purchase gold. This trend suggests that long-term demand for gold isn't going anywhere. Another key takeaway from the BRICS decision is the alliance's focus on digital payment systems instead of gold-backed currencies. BRICS members are exploring ways to create digital systems that can facilitate trade without the US dollar. China, for instance, has been piloting its own digital yuan, and other BRICS countries are following suit. Because these digital payment systems don't rely on physical assets like gold, the impact on gold prices from BRICS is somewhat limited in this respect. While digital payments won't replace the dollar completely, they allow BRICS countries to move away from dollar dependence without necessarily affecting gold prices in the same way a gold-backed currency might have. So, what about other factors impacting gold prices right now? Inflation, geopolitical risks, and interest rates all play major roles. In 2024, we've seen central banks worldwide, especially in emerging economies, adjust their gold reserves, keeping demand steady even in the absence of a BRICS currency. Geopolitical uncertainty also impacts gold prices. As tensions rise globally, from US-China relations to the ongoing effects of the Russia-Ukraine conflict, investors often turn to gold as a safe haven. So while the BRICS currency idea might be off the table, these broader factors continue to support long-term demand for gold. So, will BRICS revisit the idea of a gold-backed currency in the future? It's possible. Economic analysts predict that if dollar volatility or inflation becomes more pronounced, BRICS may consider using gold or other commodities to support a new currency. But for now, the alliance seems to be focusing on strengthening their individual currencies and using digital alternatives. In terms of gold prices, most forecasts suggest moderate growth, but no explosive spikes without a significant shift in demand. Analysts estimate that gold prices could increase by 5 to 10% annually if central banks continue buying gold at current rates, but the absence of a BRICS currency removes any immediate, dramatic upward pressure. So, to sum it up, here's the impact of BRICS not launching a gold-backed currency or payment system on gold prices. Short-term dip. We saw a small drop in prices after the announcement, due to reduced speculative demand. Long-term demand remains strong. Central banks, especially in BRICS countries, continue to buy gold. Focus on digital payments. BRICS is leaning toward digital currencies, which doesn't impact gold the way a gold-backed currency would. Influence of geopolitics and inflation. Broader market factors keep gold prices stable, despite no BRICS currency. BRICS may revisit the idea, but for now, gold prices are influenced by other global economic trends. Ultimately, while BRICS hasn't introduced a new currency, the gold market remains resilient, supported by ongoing central bank demand and geopolitical uncertainties. Investors looking at gold as a safe haven can rest assured that the metal remains a critical part of global reserves. What do you think about BRICS' decision? Should they have launched a gold-backed currency, or was this the right move? Let us know in the comments below. And don't forget to like, subscribe, and hit that notification bell for more insights on global markets and economic trends. Thanks for watching Macro Matters, and see you next time.